It's time for Charting Futures, where we dive into the futures markets through the charts. And today we're taking a look at the sell-off in commodities and one way to play it through the futures markets. Now, as you can see here, the Bloomberg Commodity Index down sharply, down nearly 2%. It's fifth greater than 1% decline since the start of June and near a 5-month low. Brent crude also sharply lower, down 2.4%. Silver down 1.6%. And some of this could, of course, have to do with trade tensions and concerns around a possible trade war. We've seen a lot of that this year, and that has been behind some of this commodity weakness. But take a look at that Bloomberg Dollar Index, up nearly 0.6%. Pressuring the commodity complex on the day. But for the longer-term chart relative to those trade tensions, what has the what has been done around the technicals? Let's hop into the Bloomberg here and take a look at this longer-term chart of the Bloomberg Commodity Index. And this is back in 2015. It represents that great crash in crude and then a slow grind higher. Not a huge grind higher, but we see that the buyers are in control since the beginning of March with the Bloomberg Commodity Index right now holding the support. That being said, this area of congestion over the last couple of weeks looks extremely heavy, so it's going to be interesting to see whether or not that holds. If it does not hold, it could just suggest that we're in for a period of risk off ahead for all of the markets. And to talk about this, I'd like to bring in Joe Perry, a consultant for Forex Analytix. And of course, Joe, you were also a futures trader for 0.72 for 17 years. So let's take a look at this board. The Dow's down just fractionally at this point, the Bloomberg Commodity down, and then we have some of these growthier currencies down. Is risk off ahead?
Risk off is ahead. And that has to do mostly with the tariffs that were placed on China last week. As soon as they were put on, the dollar started gaining strength as the commodity currencies were going lower. And now that just continued this week, and going forward, next week, early in the week, China is going to impose their own tariffs onto the U.S., and we'll see what happens there. But for right now, it's risk off. There's a lot of uncertainty as to what's going on.
And it's pretty interesting that it's across asset class. So the last time you joined, you gave a great bullish trade on the Australian dollar. That worked out. So now you're going to give a bearish trade on the Kiwi. So let's take a look at a 10-day chart of the New Zealand dollar. And what don't you like about this chart?
Yeah.
Besides the fact that it's going down.
Let's take a look into last week. First, we made highs up here. It started trending lower. Here we have an actual flag pattern that kind of accelerated right up into here, and now we have to have an extension of that flag pattern as well. That goes all the way down to 66.25, which isn't even on the chart. There is also a weekly trend line that comes through going all the way back to 2009, and you can't even see it on this chart or even a daily chart. It goes back so far, but it goes right through the day. And as you'll see on a daily, right now we have a bearish engulfing candle that looks like it's going to close, and it's going to be pretty bearish going forward.
So let's take a look at that daily chart that really outlines your trades by hopping into the Bloomberg. And this is a great 3-year chart and lots going on. So talk to us about what is happening here.
Okay. First of all, going back into 2016, we've pretty much been trading sideways all the way up through till now. Going into December, we came in here, made a low. This here is actually a Elliott wave pattern, because you start with your high here, you have a 1, then a 2, 3, 4, 5. This is this here is not done yet. There's no sign that that will complete. We have that trend line coming through the middle all the way across that goes right through today. This level right here is the 161.8 extension of these lows to this high from back in November to the 2018 high.
And just to simplify it a little bit, so in terms of the blue lines, those are your targets at 66, yes, 65, and then do you think we actually get to that 63.5?
I do. So, well,
and then your stop at 68.
Right. So what I'm looking for a bounce here into the next couple days that'll give us another opportunity to sell. So if we get up towards 67 and a quarter, 67.50, those are good places to sell. We're sitting right around 67 right now. Yep. If we head lower to 66 and a quarter, that would be the target from that flag pattern I was talking about earlier. If we get down to 66, that'll be the 127% extension level from the lows in November to the highs of this year. And even which that comes in right here. Great
trading ideas here.
If we get down to 165, that'll be the 161.8 of that same level. And if we get all the way down...
to say you are bearish on the New Zealand dollar, and this is why. Joe Perry of Forex Analytix, thank you so much for joining Charting Futures.